Welcome back to Business Talk here on businesstech.coza, where we get to speak to the leaders in the world of business and finance. Today, we've got the pleasure of speaking with Thijs van Zyl, who's the CEO of Everest Wealth and one of the top financial planners in South Africa. Also, as the head of one of South Africa's leading wealth management firms, Thijs brings a wealth of knowledge about navigating what are increasingly complex markets, both locally and globally. I'm very excited to have you on the show, Thijs, because we're at this time with imminent rate cuts. The world in general seemingly still quite geopolitically fraught, but locally improving on the political front. So a great time to be an investor. But I want to kick off with maybe a little bit more about Everest Wealth first. For viewers who might not be familiar with the brand, could you just start by telling us what Everest Wealth does and what differentiates you from other wealth managers in the South African market?
Thank you, Michael, for having me this morning. And I must say, I'm also a big fan. I do follow the show. So Everest Wealth is this year we're 21 years old. So we've been in the industry for quite a while. More focused on the alternative type of advice style, more full bespoke type of portfolio managers, more towards your private wealth type of clients. Notwithstanding, anybody can do business with us in the general public. But our holistic approach is a little bit different than your normal fund managers out there. So we have all the licensing that we need in order to manage funds on behalf of clients in South Africa and other jurisdictions as well. We have our Cat 1, 2, 2A hedge fund license. We also have a big, strong administrators that also backs us when it comes to our living annuity solutions and products and funds. And all in all, we've been around. Most of the guys that may be driving around in Gauteng, because we're actually primarily from Gauteng, next to the N1. If you haven't seen the billboard from Everest Wealth yet, then you need to go and drive and look past the Coca-Cola boards and see what we're doing. So we've been around for quite a while, so I think what differentiates us is the fact that we are a little bit different and we have a different approach, and we like the different type of tools. So we don't always just focus on listed stocks. So we also focus on alternative assets as well.
And I think, that to me is really what differentiates Everest Wealth. You've got private equity in there, you've got hedge funds. And I think often when we think investments as retail investors in South Africa, everything's pitched at the listed ecosystem. And there's so many fantastic investment opportunities, well-run family-owned businesses, and with some private equity backing, getting into those funds or going long short through the hedge fund strategy, that you really aren't using all of the tools in your toolbox if you're only going through one approach. That said, it's a very interesting time in the country, and we were just chatting before we started, the show in anticipation of this. South Africa feels like it's improving. The government of national unity took, I think, many people by surprise. All the political forecasts were the ANC would slip below 50, but it would be a very narrow slip below, and so would manage to keep a coalition of the friendly around the table. It fell far below 50, and so had to do this government of national unity. How do you see this current sort of socio-political state affecting local markets?
Yeah, so Michael, I think from a perspective, if you look at politics, it always does play a very big role in any type of country's economy. So, especially in effect of stability. So, the last 5 years in South Africa wasn't stable. So, if you have a look at load shedding, if you had a look at our political, counterparts, what was going on in government, there wasn't any unity of any sort, of any form. So, there wasn't even unity on the markets. There was unity nowhere. So, the GNU is a true, blessing for everybody, not only for good corporate governance and good governing governance, but also for the fact that the markets are reacting positive to it. International money is coming back to South Africa. And it's almost like when you walk around and you're in a mall, or if you're in a local, shopping center or whatever the case is, almost like if all South Africans are a lot more relaxed. They're also more positive about a lot of things, the outcomes of things. And the Springboks keep on winning every single match. So there's a lot of things that just keeps on going. And I think, like you said, just before the time, a little bit offline, it is a honeymoon phase. And any type of honeymoon is always, it's romance, in there, and it's a lot of things, and it's loving and caring, and we want to work together. So, Yeah, so after the honeymoon, you have to go home, and then you have to face the kids again and everything that goes with it, and your bad neighbor and your dog that bites and the cats that's all over. So yeah, so let's hope it can prolong, and we can have these markets, going the way it's been going over the last couple of months. Even though we had a tough last week, not last week, this week basically. If we see the financial, what shares and commodity shares are stumbling a little bit, but I think it's also due to the two-pot system that's also been implemented now, and the effects of that, and the administration behind it, and of course, so a little bit uncertainty again there, but we can see it in the markets. But I'm not too concerned. But I'm hoping that the honeymoon phase would actually last for another 5 years. So let's see if it happens.
Yeah, I think there's so much riding on this being a success that when the challenges happen, and undoubtedly like a marriage, you will encounter speed bumps along the way. But I think if we don't make this next 5 years work, there is a real risk of South Africa pivoting into the progressive caucus, as they call themselves, of the EFF and MK, and we know where that would take the country. So I think that really brings a lot of the political actors together. It also brings business on side as well, to know that business has got to invest. And I know there's been the NHI impasse, but hopefully business will manage to find government on that issue as well. And it's amazing what 150 plus days without load shedding will do. And of course, you mentioned the Springboks. So we certainly hope that the Springboks will continue winning. Now, a very important sector in all of this is obviously trade industry and competition. I've been very vocally critical in my Business Day columns of former Minister Ibrahim Patel. I think he was far too ideologically blinkered when it came to things like the competition authorities. There really were a "we're not open for business" sign. We hope that the new minister, Parks Tau, is different. And earlier this year, you did highlight the importance of this ministry in fostering economic growth in the country. Have you noticed any positive or negative changes in the approach of the ministry and its leadership just yet?
I think so. And also when we were a little bit offline, especially around the tourism sector. So you can see there is changes that's been made. And so also I am a fan of Minister Tau. Even if you have a look at his previous portfolio, he came out of corporate governance. He was the Deputy Minister of Corporate Governance. So he knows the red tape, also how to implement and to execute, in my opinion. And then if you have a look at the Deputy Minister, Zoko, is a youngster. And I think that's brilliant. I think to learn off the old dog, and also he's then probably going to be the next in line for that specific portfolio that we need. And of course, to have a youngster around the table when it's open for business as usual for South Africa to foreigners, it's always good to have that young blood also around the table, to add a little bit of synergy and energy as to negotiations, and also wanting to close it a little bit, off a little bit earlier than in the past. Like, no offense to Minister Patel, but yeah, the speed he was working at surely didn't, conclude to a lot of, compliments towards South Africa's economy. And then, of course, but just to have a deputy minister like Zoko in the room that has got his own ideas, he's innovative still, he's a youngster, so that's a great blend for me. And yes, I was quite verbal about it in the beginning of, the elections, that portfolio is almost more important for me than a deputy president. So just to keep it in sight and in mind, that these guys are actually got such a big, portfolio in front of them, because if these guys don't perform, South Africa is not going to perform. And South Africa doesn't need to perform, they actually need to outperform at this stage. So we need to catch up. If we're not going to catch up, then obviously we're going to stay 5 to 10 years behind. And that's something South Africa can't afford, and the economy can't afford. And if you have a look at, inflation, that's still, a little bit stagnant. If you have a look at our employment rate, that is just not, at this stage, getting where it's supposed to get at. So these guys have got a massive portfolio in front of him. But Minister Gordon Wana must work with these guys. I think, the office should almost be in the same building, if I have to put it in that way. So it's almost like a CFO working with a CEO. And I'm actually putting the CEO as the Minister of Governance and the CFO as the Minister of Finance. These guys really need to work together. And again, then complementing David Masondo, Dr. David Masondo, as the Deputy Minister of Finance, also well qualified. But I think that the blend makes sense. I think for the first time in South Africa, the cabinet has been thought through. If I have to think about other key positions that was also taken up.
Absolutely. And, often I'll chat to deal makers about what one of their biggest risks to executing on an M&A deal is in South Africa. And it was the competition authorities and the way they would apply public interest concerns. And you just didn't have the kind of certainty to be able to price a deal and to be able to execute and know that, you would have to set up this kind of SPV with that kind of community shareholding. It would all tend to happen on a ministerial whim. I think all business often looks for is certainty. I think we'll get a lot more more certainty from Minister Parks Tau. What does that mean then for South Africa? I mean, what's your outlook for firstly, financial markets? Are you optimistic about the opportunities that lie ahead, or is it more a story of show me rather than tell me, and still waiting for the reforms to come through?
Yeah, so when it comes to listed stocks and what South Africa has to offer, if we have typically go and have a look at the JSE, the structure of the JSE is more, for your medium to big size companies and not to the small cap companies. And that's a bit of a concern for me if you have a look at, if we want to evolve, and want to build this economy and to basically have something like the Altex is available on the JSE for small cap companies. But I think, from my perspective, the most growth, in my opinion, is definitely going to come out of the PE space, private debt, and then, of course, your medium to small cap companies that is available maybe on the Alt-S or on the Altex. So not to mention your normal big size cap companies, yes, that gives you the balance of the portfolio. And we're also very, in my opinion, underpriced. If you have a look at what happened over the last 5 years, we lost a lot of volume and pricing. And of course, with load shedding, everything what that happened. I mean, so we said from the beginning, load shedding's effects will only incur on financial statements and returns in a couple of years after load shedding was really aggressively going along. And it wasn't a proven fact. There was less evidence to get from these major companies. And of course, there was an impact on pricing. So there's a lot of gap that I come in, if I can say that. So within the next 3, 4, 5 years, if we can have a sustainable GNU, you can have actually good combined, structured portfolios. By saying, yes, I am going to stimulate the top 40, but yes, I'm also going to stimulate private equity, private debt, and small cap companies that might be available on the Alt-X. So, I'm positive.
It's incredible, Tace. I was watching Bloomberg about a month ago. And for the first time in a long time, one of the global strategists, when asked about the EM bucket, mentioned South Africa, unprompted. The interviewer asked, what are your views on EM at the moment? Where do you see any opportunities? And they said South Africa, for the first time, is starting to look much more attractive to us. And they're now moving from underweight back up to equal weight. So we're not yet overweight, but it was a fantastic start. I hadn't seen that on a Bloomberg screen for 4 or 5 years. It was probably Ramaphoria 1.0 the last time I saw that kind of comment. But I think a big part of it has been the reduction in load shedding. And I think it's been a rather unexpected positive development because many thought that, well, this thing is entrenched. We're not going to get rid of load shedding for another 2 to 3 years at least. What impact has this had on local markets and investor sentiment? And then looking further ahead, what are your views on the future of South Africa's energy challenges and the economic implications? Do you think we actually are finally out of the energy woods?
I certainly hope so. But the one thing that is actually a little bit of a conspiracy theory, in my opinion, is that not that I'm a theorist, but even if you have a look at the US structure and the presidency there, there's always that joke. If you become the president of the United States, they will actually tell you, who killed Kennedy and what's going on at Area 51 and all those secrets that we always see in the movies, and you can have access to it. And it's almost like it's the same, because if you have a look at all the counterparting parties that actually now got into the parliament seat as ministers of the other parties, were always, complaining and screaming and saying, but how can you guys keep on the lights? You're burning money, you're burning diesel, you're doing this. It's impossible because the infrastructure is broken. Now, all of a sudden, one of those guys are saying one word. It's almost like they got the inside track of what's going on, and I signed a non-disclosure, so I can't tell anybody what is actually going on. So it's very unbalanced, and I don't think us as investors and potential fund managers actually knows exactly what's going on the inside track. But whilst it is there, yes, so the international money is coming back to South Africa. But we must also remember, I think that the outlook is still, from a John status perspective, Grace status perspective, those things are still negative. Yeah. We're still losing out on trillions of, and millions of dollars that's supposed to come into South Africa, without, having to inflate our bonds, government bonds, etc. So South Africa is always open for business. But I just think, again, if you have a look at your trading industry, if you have a look at your finance minister, and then even having to sit down maybe with Treasury at some stage and saying to them, listen, let's make it open for business like what Mauritius did back in the day. They were also on grey status. They turned it around, and absolutely, Mauritius is a business hub, of Africa at this stage. And the money is plowing because of tax breaks and revenue breaks. So, and I really think South Africa should start thinking about that as well, to say, boys, come and do business in South Africa. Be open for business. Come, bring your head offices here, bring your warehouses here. Because if there's one thing we have, is we have employment, we have labor power. There's so many people that doesn't have jobs. I mean, if you come, we even have labor, that's not going to cost you an arm and a leg. But but the sustainability is at the end of the day is to say, but listen, can we plug and play? And when I say plug and play, is can I plug in and know I'm going to have electricity, on a sustainable basis before I actually bring my head office or my, let's say, if I want to do my production out of South Africa. But let's see what happens.
But I mean, to that point, Tace, and I know there actually are quite a few conspiracy theories about how miraculous the turnaround at Eskom has been. One of them is that there's less sabotage, and that the previous CEO, who, lest we forget, had poison slips in his coffee after going after the saboteurs and the corruption, eventually fled the country for fear of his own safety. I don't think Andre de Ruyter would have made that up. And we've seen, more reliable plant performance. The energy availability factor numbers have been going up. I think it's also the fact that we've seen the regulatory environment eased for private power producers to come in and produce their own power. And if you look at the NERSA numbers, I think it's now almost 7.5 to 8 gigawatts of power that's been brought on stream by the private sector. That, 1 gigawatt is a stage of load shedding. So it's also what can be achieved if you welcome the private sector in. And if you're a data center, you can now come in, if you've got a 5, 10, 15-year plan, you can build your own power, and you can be assured that you can then feed your own operation. So I'm very positive on the energy front, despite the fact that I think there is probably a little grain of truth about some of the conspiracy around the quickness of the turnaround. But if you look at it, I mean, we spoke about it earlier, you're advising clients to navigate all of this and to generate stable, predictable returns over the medium to long term. You use alternatives. So maybe you can expand on how you would use an alternative strategy and how you would use that to help in achieving consistent returns for your clients through a time like this.
Yeah, so I think what is very important, Michael, even if you have a look at the top 40 and you're maybe a very conservative type of investor and you maybe just want to, keep your money local, put it in bonds, put a little bit in cash, and then the rest can go into the top 40. So basically having then an average return of combined, a balanced portfolio, for instance, in the region of about 8 to maybe 10% per annum, and basically be, fine with that. So that's okay with me as well, to have a conservative type of approach and you have a conservative type of client. So we do definitely also have those type of portfolios that we do accommodate. But when we talk about alternatives, is that type of client that doesn't want any volatility, or he wants, there is always going to be volatility, but how do you manage my volatility so that I don't get priced on a daily basis? Because that's volatility. So if I'm going to be on a market segment of shares, there's always going to be a volatility factor. Like now, for instance, this year or this month and this week, you can see there's a lot of volatility running around. I mean, we've lost about 3.5% just on the all share just in this week so far, but again, next week it's made up. So volatility is always going to play a role because of daily pricing. So what we then do on the alternatives is the fact that it doesn't get priced on a daily basis. So it gets valuated, priced when you register your instruments, and then it basically gets sold and valuated on the exit date. So between that factor of 12 months, 36 months, 60 months, it all depends on the portfolio, then basically you don't get the volatility within there because it doesn't get priced. Okay, so The return is then physically based on profits of that asset within the private sector, the private security that you actually have, which then declares either interest or dividend or whatever the case might be during that term. And then after the term, the exit is then also then built out for you, and then the volatility actually only kicks in then, should there be any volatility. But most of the times, it's almost like having a business. There is a structure, there's a business plan, there's valuation, there's a continuous valuation, and then there's an exit plan. And then basically that is how any type of private equity structure is structured. Not a big fan of private debt or private credit. There's always going to be some risk factor that's always going to be built in there. So we're more asset-based, when it comes to private equity structures, to buy into existing companies that has a track record, that is definitely good expansion planning. That's the jockey is there. So you can always have the greatest racehorse that almost wins any Derby in July. But if you don't have the right jockey, it's not going to win the Derby in July. So that's also very important for us. And then to be hands-on on all our portfolios at all times. And we've had multiple exits on our fund, during the last 5 years, even through COVID and everything. And so the fund valuations that we also did down for 23, going to 24, because we're also moving towards a listing, option at the end of the year, taking some of those assets to an exit. But on the 23-year alone, our assets under management within the private equity sector was about 3 billion with a valuation rounded off to about 3.9 billion. So we're doing the right things.
Wow.
We're buying into the right structures, and we don't buy into for instance, one stock or one company. So multiple pillars. I think we're also one of the first, South African private fund management companies that has a retail, portfolio available for the private equity type of clients that's seeking that type of diversification.
Yeah, and again, to my earlier point, I think that's very rare, and it does differentiate you in the market. I'm a big believer in private equity and the ability, to your point, of the private equity general partners to take a seat on the board. And it's not just a financial investment. They help with strategy, they help with governance, they help with networks and connecting these businesses to other revenue opportunities through their portfolio and their own networks. And I mean, you've just got to look at the IRRs and the returns and also the funds raised. I was looking at the SAVCA numbers this year. Fundraising in the private equity space is at a 13-year high. That tells me that a lot of the smart money sees really good buying opportunities because the economy is looking to improve. The likelihood of getting a really good deal, acquiring an asset at a really good valuation and exiting at multiples over time. I think Benjamin Graham put it best when he said there's a good margin of safety in that. So if you're a business, if you're an individual interested in getting involved with Everest Wealth, what's the best way to start?
I think just visit our website. We're quite transparent, so everything is always available on our website to see exactly what we do. Some of the our KIDs is also loaded up there, so you can also have a look at our past performances, and of course our assets are underlying structure, and of course if you're an independent advisor listening to this, then you can also put us on your product platform as a solution towards your clients, for additional diversification. And so we're moving into positive future with the next 12 months going to next year. But I think the website will be best. Otherwise, Facebook page as well, always active on there as well. Have a look what we do. We're very communitized. We like serving the community. So we're always going to be around. So have a look at Everest Wealth. It's a name that's going to be staying for quite a while.
I have a feeling, Says, even with your history and the fact that you've got well over 3 billion in AUM, you're still only at base camp because I have a feeling that South Africa is about to take off. I'm very optimistic. Tace, thanks so much for sharing that with us today. Great insights. A pleasure sharing them with my audience here on Business Talk. Take care.